If you are collecting Social Security right now, I want you to put down whatever you are holding and stay with me for the next few minutes. Because right here, in the second half of 2026, there are three specific money changes that affect your monthly deposit, your tax refund, and your prescription drug costs. And most seniors I talk to have either not heard about all three, or they heard about one of them and never learned the single action that actually puts the money in their pocket. I am not talking about something that might help you someday. I am talking about real dollars that are either already sitting there waiting or quietly slipping away because one form never got filed or one box never got checked. My name is Tom, and finding the money that companies and government rules quietly hope you will miss is the entire reason this channel exists. I am not here to scare you, and I am not here to sell you a panic. I am here to show you exactly what changed, who it applies to, and the one step that captures it. Some of these will apply to you and some will not, and I will tell you straight which is which. Before we get into it, do me one quick favor. If you are not subscribed to this channel yet, tap that subscribe button and turn on the bell. Here is why that matters to you specifically. The rules around Social Security, Medicare, and senior taxes change every single year. And when they change, nobody mails you a letter explaining what it means for your situation or what you have to do about it. That is the whole problem. This channel breaks down every one of those changes in plain English the moment it happens, so the next update that could put money back in your pocket does not pass you by. Alright, let us get into the three changes. Here is what we are covering today. Change number 1 is about your Social Security deposit and the gap between the raise you were promised this year and the smaller number that actually landed in your account, plus the one form that can win some of that back for a specific group of seniors. Change number 2 is a tax deduction that took effect on your 2025 return, worth up to $6,000 per person, and how to tell in 2 minutes whether you actually got it. And change number 3 is a new cap on what any senior pays out of pocket for prescriptions this year, plus a program that drops drug costs to almost nothing for those who qualify. 3 changes. Let us take them one at a time. Number 1. Your Social Security deposit. Let us start with the money that hits your bank account every month, because this is the one almost everyone feels and almost nobody fully understands. Back in January, every person on Social Security got a cost of living raise. For 2026, that raise was 2.8%. On paper, that bumped the average retired worker from about $2,015 a month to about $2,071, so roughly $56 more per month. That is the headline number you saw on the news. Now, here is the part that confused a lot of people. When that bigger check actually showed up, the increase felt smaller than $56. For some of you, it felt like almost nothing. You are not imagining that, and you are not doing your math wrong. Here is what happened. Most seniors have their Medicare Part B premium taken straight out of their Social Security check before it ever reaches the bank. And in 2026, that standard Part B premium went up to $202.90 a month, which is about $17.90 higher than it was last year. So the raise went up with one hand, and the Part B premium took part of it back with the other. That is the gap. That is why your deposit did not grow the way the headline promised. For most people, there is nothing to fix there. That is just how the two numbers work together, and I want you to understand it so you stop wondering if you got shortchanged. But for one specific group of seniors, there is real money to recover, and this is the part I want you to pay attention to. It has to do with something called IRMAA. That stands for the Income-Related Monthly Adjustment Amount, and it is a surcharge. If your income is above a certain line, Medicare charges you extra on top of that standard Part B premium, and extra on your Part D drug premium too. Here are the lines for 2026. If you are single and your income was above $109,000, or you are married filing jointly and your income was above $218,000, you are paying that surcharge. And here is the catch that traps people. Medicare does not look at this year's income. It looks back 2 years. So your 2026 surcharge is based on your 2024 tax return. Think about what that means. A lot of people stopped working, sold a business, or retired in the last 2 years. Their income today is far lower than it was in 2024, but Medicare is still charging them the surcharge based on that old higher income. And that first tier of surcharge is not small. It adds about $81 a month to your Part B and about $14 a month to your Part D. Put together, that is roughly $1,148 a year per person, coming out of your pocket for income you do not even earn anymore. Now here is the action, and this is the one most people never take. There is a form called the SSA 44. It exists for exactly this situation. If your income dropped because of a major life event, you can file the SSA 44 and ask Medicare to lower or remove that surcharge based on what you actually make now instead of what you made 2 years ago. What counts as a life event? There are 8 that qualify: marriage, divorce or annulment, the death of a spouse, you or your spouse stopping work, you or your spouse cutting back your work hours, the loss of income-producing property, for example, through a disaster or a sale, the loss or reduction of pension income, and a settlement payment from a former employer. If any of those happen to you, and your income today is lower than it was on that 2024 return, the SSA 44 is how you tell Medicare to stop charging you for the old number. Let me be very clear about who this helps, because I will not let you walk away thinking something that is not true. This does not give every senior a bigger check. This is only for people who are currently paying that IRMAA surcharge and whose income has since gone down. If that is you, the SSA 44 could be worth $1,000 or more a year. If you are not paying the surcharge in the first place, this one is simply not yours, and that is fine. We have 2 more, and the next one is much wider. Number 2, the senior deduction on your 2025 return. Change number 2 is a tax change, and this one applies to a far bigger group of you. It took effect on the tax return you filed for 2025, and a lot of folks have no idea it even exists. There is a new deduction just for seniors. It came out of the tax law passed in 2025 that you may have heard called the One Big Beautiful Bill. The piece that matters for you is this. If you are 65 or older, you can claim an extra deduction of up to $6,000. And if you are married and both you and your spouse are 65 or older, that is up to $6,000 each, so up to $12,000 for the couple. Let me put that in plain terms, because a deduction is not the same as a check. A deduction lowers the amount of your income the government is allowed to tax. So depending on your tax bracket, a $6,000 deduction might mean several hundred to over $1,000 that stays in your pocket instead of going to the IRS. For a couple with the full $12,000, it can be more. Here are the rules so you know if it is yours. First, you have to be 65 by the end of 2025. Second, there is an income limit. The deduction starts to shrink once your income passes $75,000 if you are single, or $150,000 if you are married filing jointly. It phases out completely above $175,000 for singles and $250,000 for couples. So this is built for middle-income retirees, which is most people watching this. Third, and this is the good news, you do not have to itemize to get it. It stacks right on top of your normal standard deduction and on top of the extra standard deduction seniors already get. And it is available for your 2025 return all the way through 2028, so it is not a one-year thing. Now here is the honest part and the action. For most of you, if you used tax software or a paid preparer for your 2025 return, this was very likely applied automatically. You probably already got it and you did not even notice. So I am not going to stand here and tell you there is a giant refund waiting for every single person. That would not be true. But here is what is worth 30 seconds of your time. Pull out your 2025 tax return or call the person who prepared it and ask one direct question. Ask whether the new senior deduction, the one from the 2025 tax law, was applied to your return. If the answer is yes, wonderful, you are done, you already have it. If the answer is no, or if they are not sure, then you may have overpaid, and the fix is a form called the 1040-X. That is an amended return. It lets you correct a return you already filed and claim money you were owed but did not get. The refund does not come to you on its own. You have to ask for it. So the move here is simple. Confirm you got it. If you did not, file the 1040-X and claim it. That one phone call is the difference between assuming you got it and actually knowing. Number 3, the prescription drug cap and extra help. Change number 3 is about your prescriptions, and for anyone who takes regular medication, this is the one that can change your whole year. Starting this year, there is a hard cap on what you pay out of pocket for covered prescription drugs under Medicare Part D. For 2026, that cap is $2,100. Here is what that means in real life. Once your out-of-pocket spending on covered drugs hits $2,100 for the year, you pay nothing for the rest of the year. Zero on covered medications until January. For seniors on expensive drugs, who used to face thousands and thousands of dollars in costs, this is enormous. And the best part is, you do not have to apply for it or file anything. It is automatic. It is just the law now. So here is the smart move with that cap. Call your plan using the member services number on the back of your insurance card and ask for your year-to-date out-of-pocket total on covered drugs. If you are already close to $2,100, you are about to hit the point where your medications cost you nothing for the rest of the year. And you should know that so a pharmacy never overcharges you past it. If you are nowhere near it, that is fine too. At least now you know where you stand. Now, on top of that cap, there is a separate program. And this is the one that can take a senior's drug costs down to almost nothing. It is called Extra Help. It is a federal program for people with limited income, and it pays your Part D premium, drops your deductible to zero, and cuts your copays down to just a few dollars per prescription. Here are the income limits for 2026. If you are single and your income is up to about $23,475, you may qualify. If you are married, that figure is up to about $31,725. There are also limits on your savings and resources. For people who qualify, copays can drop to roughly $5 for a generic and around $12 to $13 for a brand name drug instead of the full price. And here is the honest line I want to draw for you. The $2,100 cap is automatic, and it is for everyone on Part D. Extra Help is different. Extra Help is only for seniors under those income limits. They are two separate things, and I do not want you to mix them up. So here is the action on this one. If your income is anywhere near those numbers, make one phone call. Call Social Security at 1-800-772-1213 and ask specifically about the Extra Help program for prescription drug costs. You can also apply online at ssa.gov. There is no cost to apply and no downside to finding out. The only cost is not asking. And if you apply now, in the second half of 2026, approval can lower your drug costs for the rest of this year and set you up fully for next year. Let me bring all three together in the simplest way I can, because everything we covered comes down to 3 things you can check this week. Number 1, your Social Security and Medicare. If your income has dropped since 2024 because of one of those 8 life events, and you are paying the IRMAA surcharge, file the SSA 44 and stop paying extra on income you no longer earn. Number 2, your 2025 tax return. Pull it out or call your preparer and ask one question. Was the new senior deduction applied? If yes, you are done. If no, file the 1040-X and claim what you were owed. Number 3, your prescriptions. Call the number on your insurance card and ask your year-to-date drug total so you know when you hit the $2,100 cap and your medications go to zero. And if your income is near those limits, call Social Security and ask about Extra Help. 3 numbers, about 30 minutes total. That is all it takes to know exactly where you stand on all 3. I want to close with something that matters. Every one of these 3 changes requires you to take an action. The surcharge does not refund itself. The deduction does not flag itself if it was missed. The drug cap protects you, but only once you know you have hit it. None of these send you a notice. None of them call you. The system simply waits. And the seniors who actually capture this money are not the ones with the most complicated finances. They are the ones who knew which 3 things to check and checked them before the year ran out. You just watched this whole video. That means you already know what most people your age do not. So take the next step this week. If this helped you, do 2 quick things for me. Subscribe and turn on the bell because every month there are new changes to Social Security, Medicare, and senior taxes, and I break down each one in plain English before the deadline passes. And then share this with one person in your life who is on Social Security or Medicare. A spouse, a sibling, a neighbor, someone from your church. One share from you might be the thing that puts real money back in their pocket this year. Money that is already theirs, just sitting there because nobody told them where to look. I will see you in the next one.